Hello everyone, welcome to this episode of Market Pulse. I am Ajit Mahuli, the founder and mentor at Learn Price Action Trading. Let's quickly dive and take a look at what does the monthly, weekly, and daily chart show us. We're going to have today was a holiday, so it's a shorter trading week. Now, as expected, prices have gone up to about 18,000. No supply on the monthly chart, remember, it's a pivot. Still, that's your main area of demand zone, which does not change. On the monthly chart, we're getting into areas from where we had been sold off. So more clues will be available on the smaller time frame. We have gone all the way to the deeper end here. So this is still not, we could call as a monthly demand zone. So trend is still intact to the upside with that shorter term trend change now. On the weekly chart, now here is where you will find some clues. That's the area of supply, which is where we could see about 18,200 to 18,300. That's the area where maybe tomorrow, if market gaps up there, we could stall there. It's not going to be any. So that's the area where it could probably stall. Based on the weekly chart, daily will provide us more clues. As of now, on the weekly, that's your area of picture of demand. It's not really a demand zone, but it has given a good bounce from there. So that's going to be your range for this. Remember that this week we have the Fed meet, which will affect the markets, the outcome of which will affect the markets on Thursday. It's going to be on Wednesday, US, and we will see the effect on our markets on Thursday probably. This is an area of demand for our targets. Probably that's where now two demand zones have been formed. But these demand zones are not still very powerful, or there is anything great since we are stuck into this retail area now. This is going to be a very critical area for Nifty. We could go a little bit inside and then come down. We'll have to wait and watch. No shorts till we come here. You can take a look once we hit this area. A good option would be to buy options since volatilities are pretty low. Buy options for month, let's say December and next year March, for at the money strikes, which will give you good rewards in case market turns and breaks all this and comes here. That will be a very rewarding trade. So that's the range for this week on the weekly chart. And now coming to the daily chart here, multiple supply zones. That's the best supply zone that we have, but it's too far right now, and markets have gone up in one way. Remember, this is more like a bear market rally, compressive move up, which could probably end up at this area. And if we turn here, good area for us to look at targets would be somewhere close to this. That's where some confirmation longs can also be taken if we do not go deeper into that supply zone and the Fed outcome doesn't affect markets too much. So this is the area here and multiple smaller time frame supply zones. So I've drawn this line. So once we enter into this, no longs, you can do intraday longs. Remember, the momentum is strong. This is which will start having a sucker rally, probably something like this. So be careful about getting drawn into longs so high on the curve. Intradays are fine. On pullbacks are fine. You can wait for prices to give you some confirmation before getting into shorts. And on the 75-minute chart, if you see, all these are more or less weak demand areas. So once the fall starts, you could easily move down. That's the area which can give support to the markets tomorrow if it comes down there, and that's the area of supply. But remember, it's a tested supply, so there is a good chance we could go and try and get into these areas of supply zone, which is a nice decoy here. And this is the fresh area of supply. So multiple layers of supply, volatilities are low, so do not short calls, do not go aggressively long. On pullbacks, go long and have fixed targets. Take a trade as it comes every day. This is all weak areas of demand zone. if we turn from these areas, I would expect probably this target, but it's a swing target. It may not happen immediately. The only thing that could change this is the Fed outcome, which could push prices down there by the end of this week. So we'll have to wait and watch. So very high on the curve, retail areas, longs keep trailing and try to extract as much as you can. Don't avoid getting into new swing longs. Stock specific swing longs can be taken, but index does not have any swing longs as of now. So for swing shorts, we'll have to wait for confirmation because the momentum is strong and price could go a little deeper, let's say up to 18,300. And that's where we'll wait for some confirmation to see turn in prices. So cautious approach, not all heavily bullish. This is the momentum. Maybe we could see the start of a sucker rally for the next few days before markets give you a signal. Taking a look at Bank Nifty. Now, this has gone a little bit more further up. That's again, as we had discussed, is just a picture of supply here on the monthly chart. Can it break this? Yes, it could break this possibly. Just like a spike and come down to hit all stops. That is quite a possibility. So shorts only on confirmation. That's the main area of demand zone. Probably here on smaller time frames, you'll find some more demand zones. So broader range is about 43,500 to 34,000 on the weekly chart. So that's the area of supply where we are in right now. We could probably move a little bit further up to, let's say, 43,600 to 700. That's the area, that's the line. And that's where we could possibly get a turning point for which the targets will be somewhere close to this, where we can get into some new swing positions in Bank Nifty if there are no negative news on the which will affect the indices. And as that's a still main zone, which is holding up on the weekly chart. So that's the range for now. On daily chart, you will see clear areas. So that's the main area of supply which has been created, which starts at about 43,800. And these are the areas, if you see, prices have got constantly thrown from that, and we are in this big area. Now, can it go deeper? Yes, tomorrow if it gaps up here, we'll have to wait and watch how price behaves, and on confirmation, we can look at shorts because enough room for Bank Nifty to come down, and possibly Bank Nifty could be, since it has rallied too much, it could be the one which will lead Nifty down. So wait for signals from Bank Nifty. Most of the heavyweights, except for maybe SBI results are done. So nothing to propel it up unless Fed does something. So a cautious approach, wait for swing shorts. You can look at September or December put options of 43, 42, 43 or 42,500 strikes, but not current near month, and no shorting of options. On 75-minute chart, if you see, which is the intraday time frame, that's the area where all supply starts, fresh areas of supply. So we could still go up further, let's say up to 43,500, 43,600, and that's where we'll have to wait and watch. Markets are very overextended. Again, this is more like a typical bear market rally without any pullbacks. One way sucker rally starts, most of the novices will try to enter thinking that markets will go up, break down. It should not be the approach. All longs will be only on pullbacks and shorts will be on confirmation. So I have a cautious approach towards trading. You can wait for 2 days to see how the indices. I suspect tomorrow, day after tomorrow, after the gap up, this is the area where we'll keep range bound for the Fed outcome. A quick look at the volatility index. Now, this is very interesting because volatility index is at multi-year lows again, like it was before the COVID fall or before the 2008 crash. Now, this is a very uncommon that it stays there for a longer duration. So you see, we have been staying here for quite some time. We could see a jump in the VIX as we have events coming in. So be cautious, keep an eye on the VIX. If VIX starts moving on the daily chart, we have enough room for it to go to 18. That will probably pull the Nifty index down quite a bit. So Cautious approach, patience is the key. Wait, let market give us more information to get into new set of trades. Longs continue trailing and can exit tomorrow, day after tomorrow to book some good profits. Swing shorts can be built using put options in the index.